that can be done will be done to make sure that we don't get into that situation. The second one is that, Mheshimiwa, everybody is complaining that the exchange rate depreciation is actually feeding into domestic prices, which is pushing inflation. You have seen the question I was asked in your committee the other day, Mr. Chairman, why are we coming to the supplementary in the first quarter? What didn't you know? And I gave two examples. One is the devastating consequences of what we are facing, but the other one was actually the exchange rate movements and international interest structure is actually amplifying our external debt repayments and had increased our debt by 145 billion. That is close to 0.9% of the GDP, and it was threatening to raise our deficit from 4.4 to 5.3, which was unacceptable. In the end, we were only able to accommodate 0.3% to 4.7%, but it means that we have to raise 0.6%, that's about 90 billion, and we can raise that by, one, lower the expenditure by that amount, or look for resources elsewhere. That's why our leaders, His Excellency, is very busy contacting our friends so that we see how we can ride over that. So it means that we need a drastic policy action to halt this movement. But of course, I don't like talking about monetary policy a lot because the gurus are here. You know, I'm conflicted because I was a governor of the central bank. And I think those days, I think were those days, you see, you don't want to leave part. But I think Matu, do you want to mention what you anticipate with this? Because it's very important that he has mentioned it. What do we anticipate to achieve with this move? Do you want to say one or two things?
So I think the rationale for yesterday's decision is as the CS has said. So the issue is to slow down the exchange rate depreciation and also reduce the interest rate differential between ourselves and the advanced economies, because we have been losing foreign investors has been leaving our markets given that differential. So that's the ultimate aim, to address that exchange rate differential and the depreciation, and also the impact of the cost of living. So ultimately, it's expected to benefit the countries. That's what I would add.
Very much. CS, you should not shy away from commenting on macroeconomic things, because I still believe you are the best macroeconomist in this country, if not the world. Let me appreciate the work which is going on in Treasury. You know, in April when we were in IMF World Bank talks, the talk was that the world was being surprised that we have not devoted in paying loans. I think that's actually the way they were saying is that after Ghana and Zambia, the third one was Kenya. But I appreciate that we are moving, because you see, when we were there, I happened to talk to people from Zambia and Ghana, and you know what they are saying? The government officers have been going without salaries for 6 months, because who want to loan somebody money who cannot pay? So I think that's a very, very good job which you are doing. But the issues of CDF is also very important. These members are scared of going back to home, and especially the new members. You know, the new members, they have nothing to hold on. I mean, yeah, so just work on something. If you can raise the 9 billion, that will be very important. And I understand, is it World Bank or IMF, they are giving us 100 billion for budget support. I don't know when, but if you get that one, make sure the CDF gets some.
Actually, you are right, Mr. Chairman. We have already concluded with the World Bank. The World Bank is almost concluding. The IMF is going to the board. But we also have talked to other countries like China. The president is just coming today from India, and we have talked about the same thing. I was in UAE. We had a whole meeting on Sunday morning on the same. But because everybody believes that once we ride over these shocks, we can ignite the growth momentum that we actually anticipated. Thank you so much for the faith.
And also make sure you pay the Eurobond. Yes. Thank you very much. The meeting stands adjourned.